Welcome everyone to the CFO Swinger Watch technical analysis video for the week of October 30th through November 3rd. With that, let's start off with the market. So, let's face the facts here. The market is in an official correction. That's right, we are in a correction. So about 2 weeks ago, we were in a somewhat of a moderate correction, especially when we retested that 200 SMA for the first time. But now that we've lost it for the past 3 trading days of last week, we're now in an official correction. And we can actually see this and confirm this by looking at how much we have retraced from the highs of this year. So the current 2023 highs are at 459.44. So let me get that as accurately as possible on my mouse cursor. Okay, so around there. And if we retrace all the way back down to last Friday's close, okay, it's around negative 10.58%. That is an official correction. Now, here is what you guys should know. And note, when you see a textbook correction, we tend to see prices pull back into very, very big areas of demand where there's a lot of support. And so when we're looking at the levels of 415 that we rejected off of last Friday, okay, because the high of last Friday was 414.60, or if you guys want to be a bit more specific, 414.50, which is another whole number level. So again, it doesn't matter. It's a bit subjective. You guys can choose 414.50 or 415 if you guys want to keep it simple. So 414.50 or 415 was a major level of resistance, and 408.50 or 409 is a very heavy level of support. Now, how do we know these levels are exactly what they are? Well, if you go back in May and April. So back in May, we saw the big breakout into the summer months. And that's where we also got that very nice early June gap up that we didn't fill until late September, and again retested back in the first week of October. So this is what led to that big, large run up for most of the summer months, and obviously until we hit that the last 3 months of August and September, and which obviously led into the sell-off that we're seeing now. And so this pullback all the way into this very, very heavy area of demand is very, very significant for us, because last Friday we attempted to at least retest 409 because the low of the day was 409.20. However, I need to see an actual retest of this specific level that we've had since back in April and May. And so if we do see that retest tomorrow, I wouldn't be surprised for another, yet again, a bounce at 409 or 408.50 if you want to be a bit more specific. So this entire area has to be taken as a very large area of demand. And we've been holding this area, again, back in April and May before we saw that large breakout. So we have to assume that if the buyers weren't at 415, then they have to be at 409 to have to defend this specific demand area. But now, if we want to continue to stay bearish, if buyers weren't at 415, then buyers won't be at 409. And that could mean we can continue to go back down to 404 as we inch closer and closer back to that whole number level of, you can guess it, $400, right? It is that psychological level that everyone has always kept their eyes on, well, since all of last year, right? $400, and including the first 3 to 4 months of this year as well. So again, we were able to reclaim that psychological $400 level back in March when we made that dip, and then we had that nice V-shaped recovery, and also we have broken the daily 200 SMA, and then we quickly snapped right back up on the daily 200 SMA. So if we use that type of analysis back to where we are now, it kind of feels like we're about to make that same type of move, right? At the very least. So if we are to assume that we're about to see a similar move or same move on the daily 200 SMA, since we lost it for the past 3 trading days and we saw this increased sell-off into the lows, we can at least have confidence that this demand area is going to hold and we're going to see an immediate retest of the daily 200 SMA and possibly a reclaim of this daily 200 SMA as you've seen back in March, and also when we saw that large pivot in October where we had a nice move up higher and then we retested that daily 200 SMA as well. Okay, but I would say again, the most similar price action that we saw in the past few months was in March. So I'm going to use this as our, I guess, comparison for what we're seeing now. Now, with seasonality, okay, so this is what I've been thinking. So with seasonality, we're about to have, on average, one of the best performing months for this year, right? November into December, but especially November. So I have already put this in the market summary, so make sure you guys read the market summary first. But November tends to be a very, very strong performing month. And with FOMC coming up as well from October 31st to November 1st. And if you guys remember, November 1st is when we have that rate decision, including the Jerome Powell news conference. There could be a very quick pivot as we are seeing maybe a potential new pivot low again, right? So if we don't see buyers coming in around 409, because we didn't see them coming in at 415, there is a chance that we can break below 409 and pivot officially at around 404, and that's really getting close to that psychological level of $400. And once we see whatever news comes out from the FOMC meeting, we can actually see that pivot around 404. But since we did see that increased move and quite a fast velocity move down, there is again a very, very good chance that we can see a quick pivot even tomorrow back to at least 415 and try to at least get back to retest the daily 200 SMA. All right. Okay, so that is it for SPY. All right, so make sure you guys note and put on your own respective charts of that 409 to 415 levels. Okay, so our first name here is C-A-R-T, cart, right? Or Maple Bear, or Instacart. So Instacart here is again, obviously it's a recent IPO, but it hasn't really performed well. And so far we've been consolidating, right? It seems like this name is now in a price discovery phase, which is very, very important for recent IPOs because they tend to lead into very, very large moves. Okay, so CART is currently making a nice wedge. All right, and when we're talking about a wedge, we tend to see two different opportunities, one to the long side and one to the short side. So with this type of a chart pattern, it's essential that you have at least two alerts because again, we don't know exactly what's going to happen, whether we're going to break to the upside or break to the downside, because this chart pattern allows those two different opportunities. Now, on this specific name though, I am a little bit biased to the downside because last week on Tuesday, we had a very large move up, right? All right on this candlestick, right? You guys can clearly see that we tried to bounce and we tried to move up higher, which we did. However, we rejected the very next day at this newly formed 21 SMA, and we continued to move lower and continued to stick close to this ascending support trend line. And based on the experience that I had with wedges so far, whenever the price decides to stick close to the ascending support rather than this descending resistance, we tend to break to the downside. And then we see a very swift move to the downside as well. So I wouldn't be surprised if CART decides to retest its current all-time lows at 23.36, because again, on Friday, we did not look too hot as we had a nice large, relatively large top wick on this candlestick, and we ended up closing below the daily 10 SMA. All right, so that is the reason why I gave you guys a short entry under $24, because by the time that we are at 24, we should be officially breaking below this ascending support trend line and headed into the new all-time lows, at the very least retesting the all-time lows at 23.36. Okay, now with CART here, you guys have to be careful because volume is starting to become a little bit thin, which means that there is a large move incoming. And yes, this day alone last week on Tuesday was not enough because I mean it's really obvious here. The volume dropped off rather quickly after a large volume day like on Tuesday. So definitely watch out for a volume injection that will give us an official break out of this deadlock that we've been seeing because of the fact that we've been making this wedge chart pattern. Now, if I want to be a bit more optimistic, okay, I've also provided you guys an entry for a long entry at 26.20. All right, so once we're at 26, that means we should be at least over this descending resistance trend line. Yes, we have retested this around, I would say around 3 to 4 times this resistance level. However, we have retested this ascending support trend line way too many times. All right. And again, based on my experience with wedge chart patterns, we tend to see a break of that specific trend line when we have retested it multiple times, especially when it comes to dealing with a wedge chart pattern. Right. So again, I am leaning more to the bearish side for this name and more for a bearish breakout to the downside. Okay. All right, now let's take a look at HSY. That's right, I am bringing this back from last week. Why? Well, if you guys remember what I said last week, okay, this major big chocolate name is now coming back down to retest a very major area of demand. And remember what I said about SPY. HSY has broken below its weekly 200 SMA. It's not even the daily. It's broken below the weekly 200 SMA. Plus, this name has been completely wrecked from its highs of this year. So if I show you guys the percentage decline so far, okay, as accurately as possible, we have gone down over 33% now. All right, and the fact that we are on a very long-term downtrend, the fact that we haven't been able to hold the weekly 200 SMA, there's a good chance that we can snap right back over the weekly 200 SMA. Because again, this weekly 200 SMA, as I told you last week, we haven't retested it since March of 2020. Okay, so officially 3 years ago. So with HSY retesting the weekly 200 SMA about 3 weeks ago and breaking below it now and closing below it last week, there is a good chance that the price is trying to reach a very large area of demand, like I said, at 183 to around 175.50, but specifically this previous resistance level. And once we retest it, we can see a large pivot and a bounce at that 183, or again, if you guys want to be a bit more specific, 182.50, and see that very good large bounce that we can come back over this weekly 200 SMA, or at the very least, have a very good trade between 182.50 or 183 to around 190. Okay, because right now the weekly 200 SMA is sitting at 189.75. So I would assume that last week was a very it was obviously an overreaction to breaking below the weekly 200 SMA, but you can't also forget that last week was earnings week for HSY. And again, they've actually provided a very good quarterly earnings report. So I wouldn't be surprised if we have a quote unquote late reaction to that really good earnings report. All right. Now, with HSY, there was also a lot of analyst price cuts from very large institutions. But again, we have to question their motives because I would assume that they have been short HSY for at least the half of this year so far. And if they're providing rate cuts, or excuse me, not rate cuts, if they're providing price target cuts to this name, then they're most likely taking profits and looking to have some exit liquidity provided by, you guys can guess, retail, right? Retail traders. And that's exactly what they're trying to do with these price target cuts and downgrades as well. Okay, so they're trying to get out at the best price and with no problem at all when they're trying to exit their short position on HSY. So with HSY here again, I would assume that we will be seeing a very rapid move back to the upside because again, like I said here on the RSI, okay, HSY is around 21.64 on the relative strength index. That is pretty oversold on the weekly time frame. All right, so there is a really large possibility that we can see a very good oversold bounce as we hit 183 or 182.50 previous level of resistance. Okay, so again, if you guys can see it, that 183 resistance level is around here when we saw that very large official breakout to the upside back in 2021, and which led into that huge run for all of 2022. And if you guys remember, 2022, the market was running to the downside while HSY was making higher highs and higher lows and constantly making higher highs and all-time highs. All right, that's the most important part. It was making all-time highs while the market was making new lows and lower highs. So there is a chance that HSY can start moving inversely to the market once again. Right? So with HSY, make sure you guys have a solid game plan like I given you guys here. And at the same time, I would say that if you guys want to wait, and also the reason why I have left this entry here at 190, if you guys want to wait to see an official retest and reclaim back over the weekly 200 SMA, then 190 is your best bet. Okay? All right. So that is it for equities, because again, we have to be focusing more on the markets because why? Well, we're about to have the FOMC meeting this week and the market will be reacting to that, albeit it might be really a very small reaction. Okay, and I've given you guys a reason why in the market summary. So make sure you guys read the market summary first. Okay, so now lastly, I want to take a look at BTC, Bitcoin. So Bitcoin has been officially, breaking out of its weekly resistance level at that $31,060 level that I've been talking about for months. All right, I've been talking about the level for months, even back in I believe around late June to early July, right? Which is where we saw that resistance. And now that we've officially broken it with immense amount of volume and obviously some short squeeze here, we're now starting to form a nice momentum bull pennant. And this is what we want to see, right? We want to see bullish chart patterns being formed as we're continuously moving to the upside, right? So with Bitcoin running up, okay, and the only reason why I'm focusing on this is that I'm looking at crypto-related names like Coin, okay, Riot, Mara, and MSTR. All right, so especially with Coin after that very large move up and gap up, and the fact that we've obviously filled the gap down now and still moving down, and we're now headed back to the daily 200 SMA. It looks like we're about to have another pivot on all of these names because most of these names like Coin, Riot, and Mara are back down to their relatively good and very large pivot areas like their previous resistance levels, like we see here in Mara, or Litecoin at their very major areas of support with their relative SMAs. Okay, so I will keep you guys updated on all these crypto related names, but overall, let's have a great week, and I will see you guys tomorrow morning. Have a great rest of the night, and thank you guys for watching.